What's going on, everybody? Michael Silva here. If the stock market is going to be bouncing, it's going to be soon. We're at some key levels that we're going to talk about today. But overall, today's price action, looking at the 1 minute time frame of the S&P 500, it is all over the place, coming back from an extended weekend. Hopefully you had all a good weekend. Ahead of some earnings here, we have big names such as Tesla reporting, PG, J&J, we have Verizon, and we also have Netflix reporting earnings. When we look across the board at what took place today, energy back up there at the top, financials not too far away, and that was led by reporting earnings on Bank of America. You can see here a nice big bullish engulfing type candle signaling to us that there actually may be a possibility for this to come back up and test that 20-day moving average right at around $41 if that wants to continue. There has been a positive divergence building here in both the RSI and the MACD there. So interesting stuff to watch. Other than just the financials, we have tech up there too as well. You can see across the board, it was rather flat on the day, but if you're part of today's price action, all over the place, right? Dow was down 0.11, S&P 500 0.02, Nasdaq minus 0.14, stock exchange 0.27, and so forth down the list there. We got some interesting stuff to talk about. If you're new here, my name is Michael. Make sure to hit that thumbs up button if you like this type of stuff. Subscribe to the channel. This is the Stock Market Brief Show. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Let's go ahead and get into today's show. Welcome back, everybody, to the show. We're looking at the S&P 500 right now. Now, I said that there's some key levels, and you've probably seen these by many people, right? If you just take from where we hit that low point in late February to this previous peak, which we talked about, and you draw a fib. It's really lightly here, but what you can see is the 50% retracement level is where the price action bounced from today and held as support. So if this can hold as support, this is setting up to at least get some sort of relief bounce as we're kind of just been trading downwards. It could be very well a bull flag to come bring us up to the upper risk range, which is just under that 450 marker, right basically between the 200-day and the 20-day moving average. So there's a strong possibility that we go and reach for that today if we can at least hold these key levels. So my thought process is this: if you want to go long here, it makes sense because you actually have a decent risk to reward for even if you have a stop right under this today's price action or a little bit lower and you just play to the upper risk range. So that to me makes a lot of sense. And even if it goes through here, it could go further and it could go retest this previous high right over here. So that is always a possibility. We'll keep going through the list because you can see some of the other indices here. But if we take a look at the 15-minute time frame, we are still below that declining 5-day moving average. Now, if we were to start breaking out, that upper risk range is right here, right? So just under 448, just under that 450 marker. That is also in confluence with this gap that's above us, and that can act as resistance. What also makes this a possibility good for a short-term long setup is also the fact that momentum here you can see is diverging. So price action's heading lower, but yet our PMO and our RSI are putting in higher lows, and higher lows indicating to me that the price action movement to the downside is getting a little bit weaker. That can change, it could break, but it's something to be aware of as we're running into that 50% retracement level. If we want to take it another level deeper, let's take a look at the VIX on the 30-minute time frame here. You can see price action has been moving downwards, right? So the VIX has been going downwards. That's the expansion phase, okay? Now what you see is price contracting, getting tighter. That's the contraction phase right here. And, if you were to look at it like this could very well be a potential for a bear flag, and we can break down. That would take us, obviously, higher in the S&P 500. They have an inverse correlation for the most part, okay? Now, on the flip side to that, if the VIX were to come up higher, be careful for if it were to break above 25. If it gets above 25 where it acts as resistance, there could be some firepower in here where we see some further downside in the markets, okay? So, if you take all that into consideration, I'm going to re-walk you through it, okay? From the daily time frame, the S&P 500, it's at a 50%. Let me go back to my S&P 500 chart. It's at a 50% retracement level, so that's a confluence area of support. If we take a look at the 15-minute time frame, we have momentum slowing down here to the downside. albeit like, it's also looks like it can break down from these key levels. That's totally fine as long as you're protecting your risk, okay? And it's below a declining 5-day moving average, okay? But notice momentum slowing, and then you match that here where you see the VIX. It has been putting in obviously higher lows, and it's been putting in higher highs, so it has been trending, but it's coming from a period of expansion, which is moving downward. And if this breaks down, it could head lower, which could very well perpetuate the markets to the upside. I just like the risk reward setup here because it makes sense to at least take a stab long if we're going to start running up, maybe into the beginning of May, and then maybe we can see things turn around again, okay? That's kind of my thought process there. If we take a look at the Qs, another interesting key level to watch. This one, it's hard to see, I understand, but it's at the 61.8% retracement level right now. Okay, now RSI is below 50. We're below all key moving averages. Momentum's not on our side right now. Price action has been just going sideways. So it's really just, you're just being very tactical in this environment, as the market has been, as we've already stated, just being thrown back and forth here. So it's taking a stab in pretty much the dark here, but it's taking a very educated risk based off of risk and reward. That's kind of where my thought process is. If we look at the 15-minute time frame on the Qs, once again, we have a gap above us, and that matches up with the upper level risk range. And on the shorter time frames, we do have positive divergences as the price action's heading lower. The positive divergences on our indicators, the RSI and the PMO, are moving up, so that's good. But we are still also below a declining 5-day moving average. So, if you don't want to take the opportunity to go long in these type of conditions, it makes complete sense to me as to why somebody might not want to, because you really want to see this start to flatten out and then start to curl up. And the price action could come up here, but that doesn't mean you just missed out on an opportunity. It could come right back down very quickly, as we've already seen in the price action as it stands. So you need to be tactical, obviously, given the current market conditions. Now, if we take a look at the IWM, it's also at that key level, 61.8% retracement level. This one was down almost 1% on the day, gained back a little bit there towards the end, and we're below all those key moving averages, still the 50, 20, and 200. Okay, momentum's not on our side with the MACD there. RSI is below that 50 marker. Relative strength doesn't look good, right? Nothing looks really great right here, to be quite honest, but it is at a key level. And, if that key level can hold, and you take a long position, even if it's to the upper risk range right here at around 205, you're still risking, let me draw this out for you. You'd be risking, this much, maybe a little bit more, to potentially get, let me draw it out for you, potentially get up to, this much. So just take a look there. Your risk is small for your possible reward, right? So and then you got to also focus on position sizing. But that's kind of my thought process there. And if it gets you stopped out, you can start looking at the lower risk range. And if it starts extending out of that, you may be able to take some intraday type trades there too. That's kind of my thought process going into this environment. If you look at the 15-minute time frame, price action's also below that 5-day moving average. The 5-day moving average is flattening out here, and you can just see price action has been just in this tight little channel, so it's coming towards the bottom. I wouldn't be surprised to see it try to come back up, or even try to come back up here to around 202. You can see here also too that the somewhat of a positive divergence taking place there in both those indicators as well. Let's take a look at Bitcoin. Bitcoin's also very curious right now. I got taken out of my position. I didn't get out on time, but I got out a little bit later, basically making my I took a buy signal right here, and then I got out just under that. So it was about minus 3% or 3.5% on that position. So I'm still outperforming the price of Bitcoin year to date with this buy and sell strategy. We are on that sell signal. It is verified. So now I just wait for it to turn back up. However, if we take a look at the daily price action, it does tell me a little bit different of a story here from a bullish perspective. So let's go ahead and take a look at that. All right, so we're over here looking at Bitcoin on the daily time frame on the FTX.us website. I am sponsored by FTX.us. They support this show. I use their product. I like it. You can trade if you don't have an FTX web account set up. You can trade with 85% lower fees than the competitors. And you can also download their app too and use the code TraderMike to get a free coin worth $10 if you trade on the app. I personally like using the website. You can have access to TradingView, and you can also just put in your orders right here on the side. Makes it pretty darn convenient. Let's look at this. Today's price action. I want to zoom in actually. we were looking at this as somewhat of a bearish type flag. I posted on Twitter, and I also made a video saying, hey, is winter coming here? Because it was at a very key level. And you can see that we actually broke down right through this area, but it recovered, a very bullish looking type candle for the day. And this to me signals, as we're at this area of confluence of support, it's still holding as support here. The MACD is trying its best to start curling up right here, which is also a positive sign. And you can look at the histogram starting to curl up too. Another way to look at this is you can see, if I were to just move this, you can see that we have, a low, a higher low, a higher low, and this could be the higher low. We have a high, a higher high, and a higher high, which could very well, yes, I understand that this could still be a bear flag, and we can still break down. But from a price action perspective on the daily, if you're not just trading the signal and the signal alone, this can set up very well to start moving back up to the upper portion of this channel, or at least midway to up there, which would bring us to around 48,000, maybe even 50,000 at that particular point in time. Keep in mind the context of the chart, right? There's the 50-day moving average, it's flattening out to rather neutral. So, it's not the greatest look, but we have this bullish engulfing daily candle. We're below the 50-day moving average, which is rather flat. We're at the bottom of this channel. So this also, to me, sets up for a good risk to reward trade to go a little bit higher. We will see, right? We have the sell signal, so the selling pressure could very well continue here. This could be a fake out to potentially go lower. I couldn't tell you. I'm just looking at the price action alone here. Now, if we take a look at Ethereum also is holding that 50-day moving average. We talked about that bear flag. It cracked down and is just holding on for just dear life right here. You can see it broke down, but it quickly then recovered. And you can see it almost, basically however you draw this, it could be drawn like that, where it has resistance, resistance, resistance. We talked about a potential break to support. Could tag it, and then it could very well move higher. That could very well be the back test. MACD's curling up. We had some volume come in today. Hey, you never know. This could be the start for a really big run at this time. I'm just going to wait for the next buy signal. I know that if price action starts moving up, I'm going to see that signal start to curl back over, and then I'll go from there. All right, let's go ahead and look at a couple market signal charts. All right, so welcome back to the computer. We're looking at a couple signal charts. I know a lot of this sounds, this could sound bullish, this could sound bearish to people. I don't really know, and nor do I really care what it sounds like. I'm just trying to give a good approach to the markets, whether that is bullish or bearish, and be very tactical, because this market environment, trust me, it does have the potential to go lower, and it also has the potential to move higher. And we've seen that countless times, despite what narratives are. So it's best to just find good risk to reward setups. And what I said from a price action perspective, I'm seeing a lot of bullish stuff take place, and we're holding these key levels. If those break, my attitude changes. And when we look at some of these signal charts, they don't look that good, right? So when you take 2 and 2, you put the ideals in either favor, it's kind of like, it's almost like a coin toss. So you really need to be tactical, given that it's a coin toss environment. But when we take a look at the summation index is starting to curl itself over. We had the parabolic SAR, upticking just above it. So the trend is not, in our favor right now from the long perspective. So you are taking a little bit of a stab here, given that risk to reward. The 9-month McClellan oscillator, it does actually have a higher low. So that right there is actually a positive divergence. Now we just want to see this thing turn back up. So that could be an early indication that, hey, okay, we have all this support, or key levels of support, right? We have a couple things in our favor, and we have a positive divergence on that signal. So that's a good sign. If we take a look at like the BPNDX, it's still pointing down, and it could still very well reach down into that oversold territory. It's not there yet, right? We talk about it when it's overbought, right? And then the market started rolling itself over. We talk about when it gets into that oversold area, or when there's positive divergences. So right now, it's not really giving us the complete signal, meaning that, hey, it could head lower right now, but it can also start turning back up and actually not reach oversold, okay? That's always a possibility. Now, another thing to look at is these breadth indicators, the EMA 21 and the EMA 50, and those are overlaying on the advanced decline line. I learned this from David Knepp. I can never pronounce his last name, but I really like the indicator. You want these indicators to be pointing up, and you want them to be above 0. And as you can see, we really crossed down mainly through this point right here, and that's when they all kind of fell apart. And you can see we started getting one back above it, but we didn't get both of them back above there. We're still down below them all, and you can see price action overall just it's kind of all over the place as of right now. So it would be nice to see these start pointing back up and getting back above that 0 line, but we're just not there yet. If you take a look at the NAMO, which is another, like, it's similar to the NIMA, it's just different calculation, right? It's not the traditional calculation. But if you take a look here, you do have that positive divergence as the price action's heading lower. So that's a positive sign there for the Nasdaq. And if we go to a couple other assets that are still performing, gold, right? Gold had that bullish crossover. It's still holding up rather well today. It was up today versus the other assets. So it's more of a safety play, it seems like right now. You know, silver, it was up again today. It broke out of this wedge, which we talked about, which we were prepared for. So that's another, you know, sign that, you know, people are going into different type of assets, not the typical stuff that we've been seeing here. And then the dollar, right? The dollar, you know, people moving more and more into the dollar. This thing looked like it can start, you know, taking a little bit of a breather, but it hasn't yet. Now, as you can see, I want you to pay close attention here. Okay, so basically, I'm horrible at drawing lines, but okay. Right here. Okay. Right here matches up with right here. Notice how the dollar flied up, okay? Notice how the S&P 500 went down, okay? So if the dollar starts coming off, which it's already been on a monster run, there's a strong possibility that that could help move the market up higher. So keep on continuing to watch the dollar. The dollar is trending up. So the bullish momentum lies right here. In the S&P 500, not the case. I wouldn't even really say the S&P 500 is trending. I think it's neutral trend, in my opinion. It's just going sideways. It hasn't really gone anywhere since, right, August of last year. It's just been going choppy, where the dollar is clearly in a bullish uptrend, okay? So if the dollar starts getting some weakness, that very well may help out other various commodities, even gold and silver, even more than they are, which is crazy to me that the dollar's moving up at this pace, and we're seeing gold and silver move up with it too. You usually see the opposite happen. So, you know, it's just an interesting sight overall, okay? And then on top of all of that, if you look at the 10-year yield, this thing continues to perpetuate to the upside, telling me that, hey, yes, the Fed, they're going to be raising rates, right? How aggressive can they get until something breaks here? But this thing looks like, you know, it's inches away from hitting 3%, which is the 30 marker, right? We closed at another high here today, 28.10, new high on the year right now. So, you know, that's not good for tech stocks if the rate at which this moves up continues to just move further and further to the upside. It could put more pressure on the markets overall. So I'm going to wrap this up now in the conclusion. It looks like there's a good possibility for a good risk to reward trade here, but you need to monitor your risk. That's just what it comes down to. So if you're bullish, there's that opportunity for a trade. If you're bearish, there's going to be more opportunities, especially if the market continues to just kind of chop around like this too as well. So be careful and be safe out there. I will see you guys on the next episode.